Okay, we're not playing around today. We're going straight into the price action. So I've done all the analysis. I've done all the breakdown. Um, there are just a few zones I want to make you aware of. Now, first things first. Trading is all about planning your trade, trading your plan. So on a high time frame, we know that we have a consolidation. We've broken out of that consolidation. We consolidated again. Now there are a few options here. Option number one is you come back down to test this zone here before you carry on up. That option makes sense. Why? Because we have got all these fair value gaps here. Inefficient price actions, they get filled. Option number two, we play at this bottom and then we rotate up. All right. That could give us a nice continuation play. And it can also fulfill a nice Wyckoff 3-tap model, which we're going to talk about in a sec. Okay. So that is option number two. Now, option number three is we continue to range in this range as we have for the last 100 days. Those are your three options. Now, price action has a limited amount of things it can do. Don't be deceived. Don't think the market is so random. They're not that random. All right, it's got a limited amount of things it can do. And once you understand how those things work, you're going to be better able to profit from those things. Now, let's split this into two categories. You've got the bulls, you've got the bears. Now, the bulls are looking to enter longs. All right, they've seen this 10% drop down. They're thinking, oof, we're looking to enter a long soon. Now, if you're a bull, first of all, you are relying on price not piercing through these fair value gaps. And also, you're relying on price getting a reaction off of one of these demand zones. We've got a 45-minute zone, a 2-hour zone, and a 24-minute zone. So I'm going to be looking at those levels for trade number 1, 2, and 3. Now, is this going to be a swing trade? Probably not, because I realize that my price action on a higher time frame, I'm not going to go to the higher time frame, but this is what price looks like on a higher time frame. We've got high, 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 low, high, high. If we had to come down here, this would be a break in structure, an official break in structure. That break would have taken place right there. Okay. Now, assuming this is a break in structure, let's just make this a bit thicker so for those of you can see it as well. Assuming this is a break in structure, what is price action likely to do? Retrace and come back down. So why are we looking to enter a swing trade when we know we've just flipped structure bearish? Okay, so this is why these three long trades are going to be scalps unless we have one condition met. Let's go to the whiteboard. Unless this condition is met, where this is our range, we oscillate in our range as we have been. We break down from that oscillation to displace some shorts, some retail traders. All right. But not only do we displace retail traders, we give us an initial first, and then we have a second model entry where we sweep that initial high. This is the only scenario where I will be looking to enter a swing trade if price decides to do this at this range low. Okay. So if this is what we start to see. So we see a nice little accumulation here. Sweep it, break structure, then that will be a nice PO3 play. All right. Kind of a reaccumulation. All right. And by reaccumulation, for those of you who are new to trading or new to this channel, by new reaccumulations happen in an uptrend where price is going up, it ranges, all right, and then it carries on going up. This is what is known as a reaccumulation. A redistribution is the opposite. So if we flip this chart, see if I remember how to flip this. Yeah, there we go. This is a redistribution. Price is coming down, all right, and then it starts to consolidate and then it continues going down. That is what is called a redistribution. Okay, so back to the right order. If I see that, I'm going to be looking to enter a long. But remember, I said we're going to be looking to enter a long on the second entry. So that could take place at either one of these demand zones. I don't really care. Don't really care which one it is. But I am going to be looking to see the structure, this leg down. What's the structure saying as we go? All right. Now, I probably won't be entering this trade on the 12-hour. So we're going to drop down structure to see, where is likely, what time frame is likely for us to see that flip for that notable trade. Well, really and truly, I'm going to be looking at maybe the 45-minute to 1 hour to enter that trade. And the reason I say that is because if we look at our structure on the way down from this range high to this range low, our structure obviously looks like this. We've got bang, we've got bang. So if we look at this decisional leg now, okay, if we trace this structure all the way down, and I'm going to do it very briefly, and I'm going to skip a few steps here because they're not important to the cause or what I'm saying right now. So we're going to say, well, if this is our low, we're going to call this our high. So I'm just ignoring all this trash that's happened here, and we're going to be saying this is our structure right now. Right? So based on that perception of market structure, well, what's happening in this leg is your next question. Well, in that leg, well, what you might want to do is maybe zoom in. In that leg, I'm also going to skip a few structure points, and I'm going to say, well, in that leg, well, our structure looks like this. Bang, we're skipping all of this trash because it doesn't really change anything. Bang, 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 bang. Okay, so we'll change the color to that. Let's give that yellow. All right. Now, if that's yellow, well, what's going on in this leg? Well, in this leg, see how I'm going from leg to leg to leg to leg to leg to see what price is going to do next. That's how you need to look at the structure as well. Now, this is what's happening on that decisional leg. The reason we call it a decisional leg, this is the leg that's going to make the next decision. So looking at that structure now, we can see then that this is the last lower high for us to get a flip in structure. So if we get a flip like this, that being the break, I'm going to look to enter that retracement to take that up. All right. But am I just going to enter that trade and forget about it? No. I'm going to be looking to see what is price doing at my 3-hour zone, at this 3-hour zone there as well. All right. To see, because price could easily just be doing something like this where it, on the blue structure, makes a low, 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 high, low, low for another low high for another low, low. Price could be doing that on our blue structure drawing. All right. This is a possibility. So because of that, I'm going to be treating these as scalps, not swing trades, unless I get that PO3 move. All right. So those are the 3 longs I'm looking out for. Now, we're not wasting time here because we need to try and wrap this up as quickly as possible. Okay, because I've got a meeting. I've got a meeting very, very soon. Okay, so next. So these are our longs. Next, where are the shorts coming from? Well, if you're looking to enter a short and you're a bear, well, you've probably realized that, hey, price from this range high looks like this. That means this entire pink box is the next likely place to get a lower high for another lower low. Based off of that, now it's your job to say, where in this pink box can I get a reaction from? Well, first things first, let's look at where most volume has been traded. Well, have a look at your fixed range tool. Take your fixed range. You can start at your range from about there. Let's see, where does the value area high lie? Where's the POC lie? All right, so we've got our value area low, value area POC, value area high. Okay, so price could get a reaction from each and every one of these points, granted. But not just that, we can see that this POC is also confluent with this box. Oh, what does this box mean? Well, this box, for those of you who love Fibonacci, is your Fibonacci zone. Not your Fibonacci zone from the range high to the range low, because that's given by this box. It's actually your Fibonacci zone from this last leg. Okay, so that is what we're looking at right now. So that's where I've got trade number 2 here, trade number 3 there as well. So these are zones I'm watching. But really and truly, I'm watching this entire pink zone. If I do get structure coming up that looks like this, where we start making our way up, and all of a sudden we come into that zone and then bang, I see that breaking structure, I'm going to be looking to enter that. I'm going to be targeting at least this low, and I'm going to be watching to see if we get any transition in structures here as we come down. Also, quick shout out to everyone who's followed recently. Big up to all of you guys. Welcome to the family. And also, big shout out to, is it Ty? I think Ty has left a comment. He says, awesome. I watch your content every week. Thanks for sharing all that knowledge. I've longed at 92K. Let's see what Bitcoin is going to do. All right. So we did get along at 92K. Let's quickly check where that is 92K. All right, that is right here. Okay, so Ty, you may have been stopped out now. Depends where your stop loss was, but you may have been stopped out. Now let's see. Should Ty have been in that long at 92K? Well, at 92K, did we get a confirmation? Now let's see. Why did Ty long at 92K? What was the reason? Well, I'm guessing he's looking to, I think there was a zone in here. There was a 2-hour zone, which I think he may have been trying to catch. Also realizing we're in discount, so he's looking to long at discount. Those are my justifications of that long. All right. Now, but let's see though. So he is longed here. Did we have a confirmation to justify that long? Well, let's take a look. If we drop down to maybe the 24-minute and see what happened at that zone, well, we can see here that there is no confirmation. So if we just trace it, he would have been looking at the price from here, low, high, low, 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 high, low, 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 high. All right. No confirmation. So that was a risky long, Ty. That was a risky long, and I hope you only risked 1%. Okay, because we got this massive move after. Now, Ty, if this had happened, if we had seen price action that looked like this, then I would have said yes, great long. If we saw that, a break in structure, then a retracement, yes, that would have been an exceptional long, but we didn't quite get that. So I hope you haven't risked more than 1%. And also I hope, your stop loss has been tight and you haven't moved your stop loss or, tried to preserve that trade because, yeah. Anyways, there's going to be more trades anyway. So just make sure the next one's a winner. All right. So that's how it goes. So we've got our fib zones there. We've got a POC there. So these are key zones we're watching for our next trade. And that's kind of what I'm looking out for. I'm not going to overcomplicate this. That's kind of what stands out to me. I'm not going to make this a 6-hour video when it doesn't need to be. But these are the zones I'm watching for. These are my higher probability zones. And these are where I think the next, decent trades are going to come from. But just remember, guys, if we start closing below this level aggressively, be careful long any of these zones. Why? Because of these fair value gaps. And look at that liquidity pool we've got over there. Okay. Now, on a grand scheme of things, on a higher time frame, like I said, we could well just be coming for this box here. And if we are coming for that box, well, what do you think we're going to do at that box? Well, we're probably going to look to long it at that box. Not the entire box, but we're going to refine it. Maybe we'll refine it to this last zone. We've got a daily zone there as well. And that will be a beautiful swing trade. Okay, that would be a beautiful swing trade. And also, let's see. Fibonacci. Look at that. Fibonacci is also telling us that, hey, this is an interesting zone. This is a zone you need to watch out for. Okay, so that will be a beautiful zone swing trade. But we're not worried about that yet. When the time comes, we'll talk about that. But anyways, yeah, we'll leave it there today. And don't forget to hit the boost, subscribe, follow, move. And move the content out there because as it's helped you, I'm sure it's helping other people and it will help other people in the future. But anyways, I'm probably not going to get time to do a video tomorrow because Wednesdays are very busy for me. Thursdays are also very busy for me. Friday, I could potentially do an update. So let's see if any one of these trades get tagged by Friday. But yeah, we'll leave it there and I'll see you next time.